Hello everyone, welcome to another episode of the Export Launch podcast from India Ratings and Research. I am Prashant Soodamani, Senior Analyst from the Structured Finance team. With me we have Sonam, Vora and Agasti Tari, Senior Analyst from the Structured Finance team. In today's podcast, we will be discussing the Structured Finance outlook for FY25, the recent trends and what to watch out for in the upcoming years. To start with, India Ratings and Research expects all asset classes to show a neutral performance. The ratings outlook for the agency-rated transaction is still stable across all asset classes. The stability is expected to be aided due to pool selection criteria and available credit enhancement in the transaction. Let's start with the market overview on the performance. So, Sonam, can you shed some light on the same?
Thanks, Prashant. So, looking back at 9 months of FY24, the Indian economy has seen improvement in economic activities aided by continued infrastructure spending and strong consumer sentiments. As far as securitization market is concerned, the total securitization volumes were up 18% YOY to around 1400 billion for 9 months FY24. We continue to expect this volume to reach all-time high in FY25 owing to continued credit growth and diversification of funding mix by NBFCs. In terms of performances, intra-rated transactions continue to perform well within initial expectations during 9 months FY24. Collection efficiencies across all the asset classes has remained consistent, with current collection efficiencies for commercial vehicle, tractors, and secure business loans asset classes remaining in the range of 80 to 90%, while for other asset classes it has been remained above 90%. And as to what we expect for FY25, we expect performance to continue to remain range bound within our initial estimations.
Right. So, Sonam, can you highlight new developments in the market for structured finance?
Sure. There have been many interesting developments in the market which could give a leg up to the securitization market in India. One interesting development is establishment of RDCL, which is a special purpose company set up by NHB for promoting growth of mortgage-based securitizations. EVs are also making their presence felt in securitization loan pools. With respect to transaction structures also, we are witnessing some new trends such as replenishment structures across asset classes such as unsecured personal loans, unsecured business loans, trade receivables, two-wheelers and commercial vehicle loans. There have been structural features also incorporated to address a specific risk such as interest rate risk, which is addressed by using floating rate liability. Similarly, appointment of backup servicer at the transaction initiation to address the servicer risk. Overall, Indian securitization market seems to be evolving and investors getting comfortable exploring the various structures.
Thanks. Talking about the trends, what have you noticed in the unsecured loan segment given the recent regulatory focus? And is there any change in agency's outlook?
So, unsecured consumer loan growth continues at a steady pace despite regulatory headwinds. The rapid change in lifestyle and easy availability of credit is driving the demand for personal loans. Investors continue to show interest in unsecured asset classes given the availability of various mitigants to combat the risk. Average delinquencies in unsecured consumer loan pools are expected to remain within India's expectation. Hence, we maintain the neutral outlook for this asset class.
Thanks, Sonam. Now let us move on from here to some of the other asset classes. So, Agasti, what are the driving factors for commercial vehicles which take up the largest share in the Indian ABS market among other asset classes?
Sure, Prashant. So, CV sales growth could see some moderation in FY25 due to the cyclical nature of the industry and base effect. The operating margins for borrowers, though, are expected to be supported by adequate fleet utilization levels, improvement in freight rates, and stable fuel prices. The government's continuing push for infrastructure and construction activity is expected to drive growth and a favorable business cycle. Hence, the agency continues to keep a neutral asset performance outlook for vehicle loans for FY25.
Thanks, Agasti. Can you also share some lights on two-wheeler, tractor, and MFI asset classes, especially as their performance is inherently linked to the performance of rural economy?
That's right. The performance of two-wheeler, tractor, and MFI is driven by rural economy. Recent decline in reservoir levels and unseasonal weather patterns could impact the overall economic growth over the near term. However, despite the above challenges, we expect the performance to remain neutral, owing to improving rural agricultural wage growth, increased budget allocation for Manrega, increasing MSP and food subsidy.
Thanks, Agasti. Now, Sonam, can you also shed some light on our outlook for business loans and home loans?
Sure. Indra has maintained the outlook for both these asset classes neutral. Secured and unsecured business loan growth is expected to be driven by continued government support, improving business activities and capex, whereas stable property prices, stable interest rate, and increased private wage growth is expected to support demand for home loans.
And now to wrap up this podcast, Agasti, can you help the listeners with what to watch out for in the upcoming year?
Sure, Prashant. So there are a couple of things to watch out for. Firstly, the performance of consumer loan segment, specifically in the high and ultra low ticket segment remains a key monitorable. Secondly, on a macro front, interest rate and inflation needs to be observed as increase in interest rate puts pressure on all asset classes. And finally, the ongoing global geopolitical conflicts, if they lead to a spike in oil prices and increase in freight costs, may impact the domestic consumption and also affect MSMEs whose business is linked to international market.
Thanks, Agasti. So, for further insights on the points discussed in our podcast, you can view our report published on www.indiaratings.co.in under the Research and Publications tab, and also you can reach out to us in case of any questions.